Have you ever wondered how much you would have earned if you invested in Google, Apple, or Tesla a decade ago? As we journey through the realm of financial possibilities, let's take a moment to marvel at the meteoric rise of tech companies over the past 10 years. Imagine just for a moment that you took a leap of faith and invested £1,000 in Google, Apple, or Tesla 10 years ago. Where would you be today? Well, your investment in Google would have multiplied nearly tenfold. If you'd placed your bets on Apple, you'd be looking at a return of more than 11 times your original investment. But if you'd gone all in on Tesla, you'd be sitting on a staggering 40 times your initial stake. These figures are not just numbers, they represent the transformative power of early investment in burgeoning tech companies. These companies, once considered risky bets, have reshaped our world and rewarded their investors handsomely. Indeed, the power of tech investments is undeniable. Investing in tech stocks has its advantages, and we're here to uncover them. One of the most compelling reasons to venture into tech investments is their high growth potential. Technology is an industry that's rapidly evolving, and companies that can pivot and innovate often see exponential growth. This high growth potential translates into greater returns for investors. For instance, if you had invested £1,000 in Apple back in 2003, your portfolio would be worth over a staggering £300,000 today. Another advantage is the impact of technological innovation. The ability to create new products, services, or ways of doing things drives the tech industry forward. Companies like Google and Tesla are constantly pushing the boundaries of what's possible, creating new opportunities for investors. Technological innovation isn't just about new gadgets and apps, it's about fundamentally changing the way we live and work. It's about creating a future that's more efficient, more connected, and more sustainable. The pervasiveness of technology in everyday life also contributes to the appeal of tech investments. Think about it. From the moment you wake up to the moment you go to sleep, technology is intertwined with almost every aspect of your life. You check your emails on your smartphone, you work on your laptop, you stream shows on your smart TV. The companies that create these technologies have a huge and ever-growing customer base. This wide market reach often results in robust financial performance, which is good news for investors. Using data to back these points, the tech sector has outperformed the overall market in the past decade. According to a report by PwC, the tech sector's compound annual growth rate was almost double that of the S&P 500 from 2010 to 2020. As we can see, the upsides of investing in tech stocks are quite enticing. The high growth potential, the impact of technological innovation, and the pervasiveness of technology in everyday life make tech stocks a compelling investment option. But as with all investments, there are risks involved, which we'll discuss in the next scene. However, as with any investment, there are risks involved in tech stocks. Let's get real. Tech stocks can be a wild ride. Their market volatility is often higher compared to other sectors. Remember the dot-com bubble of the late 90s? Many tech companies saw their stock prices skyrocket, only to come crashing down when the bubble burst. Investors who had put their faith and funds in these companies experienced significant losses. Regulatory risks also pose a substantial concern. Tech companies operate in a rapidly evolving landscape, and they are often at the forefront of new technologies and services. This innovation can, at times, outpace regulations, leading to potential legal and regulatory challenges. For instance, tech giants like Facebook and Google have faced hefty fines and legal battles over privacy concerns and anti-competitive practices. These issues can have a direct impact on your investment, causing stock prices to take a hit. The fast-paced nature of technological change presents another risk. Today's cutting-edge technology can become tomorrow's obsolete gadget. Companies that fail to innovate and adapt can quickly fall behind. Remember BlackBerry? Once a leader in the smartphone industry, it failed to keep up with the innovation of competitors like Apple and Samsung, and its stock price plummeted as a result. Beyond the company-specific risks, there's also the broader economic climate to consider. Tech stocks are often more vulnerable to economic downturns. During periods of economic uncertainty, investors may pull back from riskier tech stocks in favor of more stable investments. It's also worth noting that tech stocks can be pricey. High-profile tech companies often have high share prices, which may make them inaccessible for some investors. For instance, a single share of Amazon or Google can cost over $1,000. In conclusion, while investing in tech stocks can offer impressive growth and returns, it's not without its pitfalls. Market volatility, regulatory risks, the rapid pace of technological change, and high share prices are all factors that can impact your potential returns and should be carefully considered before investing. It's clear that while tech stocks have the potential for high returns, they also come with their own set of risks. So, how can you navigate the world of tech investments wisely? Well, the key is to strategize. One tried and true method is diversification. This means not putting all your eggs in one basket. Instead of investing solely in one tech company, spread your investments across multiple firms. This can help cushion any potential losses. Next, stay informed. The tech world is ever evolving, and being up to date with the latest news, trends, and advancements is crucial. This knowledge can guide your investment decisions, helping you discern which technologies or companies are likely to prosper. Finally, understand your risk tolerance. Tech investments can be volatile. While they can offer high returns, they can also lead to significant losses. It's important to invest only what you can afford to lose and to be prepared for the possibility of market fluctuations. With careful planning and strategic decision-making, you can potentially reap the benefits of tech investments. The world of tech is ever evolving, and so is its investment landscape. Looking ahead, we see tech investments continue to bloom, particularly in emerging sectors like artificial intelligence, blockchain, and clean energy. Artificial intelligence, once a concept of science fiction, is now transforming industries, from healthcare to finance. Investments in this sector are predicted to skyrocket as more companies harness the power of machine learning and data analytics. Then there's blockchain, the underpinning technology of cryptocurrencies. Beyond digital currencies, blockchain is revolutionizing sectors such as supply chain management and real estate, making it a promising investment avenue. And let's not forget clean energy. As global concerns over climate change intensify, investments in renewable energy technologies are poised to surge. Companies pushing the boundaries of solar, wind, and hydro energy offer exciting investment opportunities. So, as we look to the future, these sectors represent the cutting edge of tech investments. In the world of tech investments, the only constant is change. Are you ready to embrace it?